Greetings, this will be a short video in our new series of shorts that provide simple updates that don't require an entire video built around them. The Federal Reserve recently came out with the velocity of money data for Q2. And velocity of money, as you can see from the video in this card over here, is a determinant of GDP as well as of short-term inflation. And for Q2, velocity of money did not rise much at all. It's still languishing at this relatively low level. Going to the 1-year metric, you can see that it is still 1.12, just like it was thereabouts in Q1. So velocity of money is not springing back at all. Now, it's been in steady decline for many, many years, even before the COVID-19 crisis, and it plunged after that point, and it's not rising even though many types of business activity have returned. This is because the poorest people are not really getting that much money despite all the government stimulus, because the jobs that they used to work in are not being allowed to recover for a variety of reasons that you're familiar with. But if velocity of money shot up quickly, then there would be a small amount of temporary inflation that dissipates just as quickly as it came. But the better thing would be if there were a gradual increase in velocity of money over a multi-quarter period, because then the Federal Reserve will not overreact and tighten too much and stop money printing, which of course will cause a major market correction, because remember, they have a greatly exaggerated fear of inflation and insufficient fear of deflation. And they did this in late 2018 as well. There was no high inflation at that time, but just in the off chance that it was about to arrive in the near future, even though it had not arrived at any other time before then from their quantitative easing program, they overreacted, over-tightened, and caused a major market crash, and they had to return to lower interest rates and more monetary creation, more QE shortly thereafter. But for Q2, the velocity of money metric has not come back at all, which increases the chances that it will only be a gradual rise back, because people have adapted to a new economy, and many elements of that will not go back to what it was pre-COVID. So if you're interested in inflation, or you don't buy my thesis of why there is ongoing technological deflation and there's really no threat of high inflation, even at current levels of printing, which are about $400 billion a month worldwide, as we can see from this card up here, which is a monthly report of world monetary creation, this is one metric to look at, velocity of money. It came out just yesterday and comprised another element of the spectrum of metrics to look at while tuning out all the media narrative around inflation, because that is the narrative that the media and the large institutions want to push in order to keep people edgy, frightened, and misinformed. Thank you very much for watching.